There are only 4 crypto billionaires on the Forbes 400 list of the richest people in the US. During the 2022 bear market, or crypto winter, some of the wealthiest founders lost billions of dollars. So it's safe to say there aren't as many crypto billionaires as there used to be. That's why in this video, we're going to dive into the bear market's casualties and how the crypto billionaires are disappearing. First off, where did it all start to go downhill? It comes after the Terra blockchain broke down in May, which caused prices to drop sharply and hurt cryptocurrency holdings. From its record closing high of $69,000 in November 2021, Bitcoin has lost more than 70% of its value. But that's the thing. Every other important cryptocurrency fell along with Bitcoin. Ethereum, the second largest digital asset, has lost 75% of its value since its all-time high. Along with 3 of these coins, Solana, SOL, Cardano, ADA, and Binance Coin, BNB, are also in the red. And according to data from CoinMarketCap, the total value of all crypto assets has gone down from more than $3 trillion in November to $967 billion at the time of this video. In some ways, this year's bear market is the first of its kind. It can be called a mix of bad macroeconomic conditions, geopolitical tensions, and questionable projects and decisions by crypto founders. Extreme fear is the current reading on the Bitcoin Fear and Greed Index, followed by crypto billionaires and their declining fortunes. In June, the price of Bitcoin fell to less than $18,000, and a few crypto founders and investors lost a lot of money. Although he still has the most money in crypto with a net worth of $17.2 billion, but according to Forbes, Sam Bankman-Fried, the co-founder and CEO of the cryptocurrency exchange FTX, had lost 23% of his wealth since last year, when it reached $22.5 billion. This was a big year for the 30-year-old as he gave $16 million to super PACs in April, making him one of the most generous donors. He also wants to support Democrats in the next US presidential election by giving between $100 million and $1 billion. Sam also gave BlockFi a $400 million loan through FTX in June. We can say Bankman-Fried has become a messiah in the crypto world. Through one of his companies, Alameda Research, he also gave a $500 million loan to the bankrupt lender Voyager Digital. But industry media says that Bankman-Fried is planning to buy more companies, which is good news because FTX has about $2 billion in cash. Adding to this, Gary Wang is considered Bankman-Fried's right-hand man, as he helped start Alameda Research and FTX. He's also the chief technology officer at FTX and owns 16% of the company. But Wang lives a private life, and FTX's growth is largely credited to him and Bankman-Fried. The software engineer is 29 years old, has a net worth of $4.6 billion, and is number 227 on the Forbes 400 list of the richest people. Well, that's not too bad. Next up, Ripple's Chris Larsen. Chris Larsen, co-founder and chairman of crypto payments company Ripple Labs, saw his wealth drop from $6 billion to $2.8 billion over the last year. Since last year, Ripple's native token, XRP, fell by 75%, which hurt the 62-year-old's net worth. Also, his long-running legal battle with the US has affected the company. But surprisingly, the price of XRP has gone up more than 30% in the last 2 weeks, reaching $0.4595 at press time. And with that, Larsen stays on Forbes' list of the richest people at number 380. The business executive and angel investor hasn't said much about the SEC lawsuit, but he's still talking about Bitcoin. Moving on, let's look at their fall from grace. Brian Armstrong, 39, and Fred Ursum, 34, who helped start Coinbase Global, were once worth $15 billion between them. But since the company went public for the first time in April of last year, its shares have dropped by 80%, cutting their wealth to $2.7 billion and $1.1 billion, respectively. Armstrong is still on the Forbes 400 list of wealthy people at number 388, but his fortune may have dropped more than most. Ursum left Coinbase in 2017, so his worth went down from $3.5 billion, and he was no longer on the rich list. We can see the bear market has hurt Coinbase the most, which is the biggest cryptocurrency exchange in the United States. Compared to the previous 3 months, the amount of money traded in the fourth quarter of 2021 was $277 billion, almost half of what it was in the previous 3 months, as the fees on trades are how the exchange makes money. Coinbase also fired 18% of its staff in June, implying the possibility of a recession leading to a long bear market. As for the Winklevoss brothers, their fortunes fell from a high of $4.3 billion each to $2.2 billion each, but they've found alternatives soon enough, as the twin founders of Gemini have turned to music because the markets are falling apart. Gemini said in June that it would cut about 10% of its staff because the market was not doing well, and both of them have been taken off the Forbes 400 rich list. What's more, 3AC's uncooperative founders. The founders have only hired the liquidators individually since their first virtual meeting, which both of them attended, and Davies reportedly hasn't told anyone how to get into a safety deposit box with crypto credentials. 3AC is also under the watchful eye of two well-known federal agencies in the crypto world, the U.S. Commodities and Futures Trading Commission. Bloomberg reports that both agencies are investigating whether the hedge fund misled investors by not registering with them and lying about its balance sheet. And when Luna suddenly became worthless, Three Arrows Capital lost a lot, putting at least $200 million into buying the coin. So clearly, the collapse of Luna was part of a spectacular meltdown of Terraform Labs' algorithmic stablecoin ecosystem, which cost investors about $40 billion. Since then, the Luna Foundation Guard, which is supposed to help Terraform Labs' stablecoin stay pegged to the US dollar, hasn't yet compensated for the losses suffered by the parties that sold their coins. Big loss. Coming up next are Three Arrows and their links to Terraform Labs. The failure of the founders of Three Arrows Capital to work together is similar to what happened to Do Kwon, the CEO of Terraform Labs. But in this case, the elusive CEO and co-founder of Terraform Labs, Do Kwon, has been a little more vocal on social media. Since South Korean authorities issued a warrant for Kwon's arrest on September 17, 2022, after he reportedly fled Singapore, they've been playing cat and mouse with him. But later, he publicly stated that he wasn't on the run. That makes sense. Soon after, South Korean prosecutors asked Interpol to issue a red notice against the TFL CEO. This will allow law enforcement to temporarily arrest a person while they wait for extradition or other legal proceedings. Someone's in big trouble. But after being put on the red list, Kwon denied that he was hiding. He said that he was writing code in his living room and that no law enforcement had ever bothered him, even though he went for walks and went to malls. This then led to South Korean officials taking away his passport, which could force him to say where he was. On top of that, officials said they would deny his request for a new passport. According to smart on-chain analysis, Kwon sent Luna 2.0 tokens from the Terra 2.0 blockchain to Binance. And at press time, Kwon hadn't responded to the revocation, but he kept tweeting about the progress on the Terra 2.0 blockchain. blockchain. Finally, will these crypto billionaires recover their wealth? Founders like Changpeng Zhao of Binance, Mike Novogratz of the hedge fund Fortress Investment Group, and others have lost billions of dollars because of the market downturn. As a result, several crypto tycoons who are still billionaires are not on the Forbes 400 list of the richest people in the world. Bear markets, on the other hand, often happen in digital markets. So it's not surprising that crypto fans say that what's happening is only temporary, and they hope things will get better soon. Buterin, the creator of Ethereum, has said in the past that he would like crypto prices to go down, and in February, he told Bloomberg News that many people who are really into crypto, especially when it comes to building things, welcome a bear market. Fred Ursum tweeted, "One thing most people don't fully understand is that it takes years, and sometimes decades, for a new infrastructure-level technology breakthrough like crypto to lead to a vibrant ecosystem of mainstream applications." And according to the Winklevoss twins, their investments are for the long term. Well, it seems like the Winklevoss twins already learned their lesson back in 2004. That's all for this video. What are your thoughts on the casualties of the bear market? Do you think these billionaires are ever going to recover their wealth? Let us know in the comments below. Don't forget to like this video and subscribe to our channel for more exciting content in the future. Thanks for watching. See you next time.